Friends, let's combine this week's market trends and news to analyze the outlook for next week, February 9th to February 13th. This week, US stocks staged a dramatic V-shaped reversal. In the first 4 trading sessions, the market retreated steadily amid concerns over AI investment returns and a sell-off in tech stocks, with the Nasdaq briefly falling into negative territory for 2026 and the software sector posting its worst weekly performance since 2008. However, an epic rebound arrived on Friday, February 6th. The Dow surged 1,206 points to break through the 50,000 mark for the first time, while the Nasdaq and S&P 500 jumped 2.18% and 1.97% respectively. For the full week, the Dow rose 2.5%, but the Nasdaq still fell 1.84%, and the S&P 500 edged down 0.1%, highlighting a deep divergence between tech and traditional sectors. The core catalyst for the rebound was former President Trump's nomination of former Fed Governor Kevin Warsh as the next Federal Reserve Chair. Although Warsh is known for his hawkish stance, the market believes he's more likely to uphold the Fed's independence. After the news, the US dollar index rose nearly 1%, while gold and silver, which suffered an epic sell-off the previous week, staged a strong comeback, with spot gold surging nearly 4% on Friday and spot silver soaring over 9%. The rebound in tech stocks showed clear selectivity. Nvidia surged nearly 8% on Friday, adding about $325 billion in market cap in a single day, as CEO Jensen Huang refuted the logic that AI triggered the software sell-off. AMD rose over 8%, Broadcom gained over 7%, and Tesla climbed over 3%. However, Amazon plunged over 5% after announcing that its 2026 capital expenditures could reach $200 billion, raising concerns about return on investment. Google fell over 2%, and Meta dropped more than 1%, indicating an intensifying divergence within the AI narrative. Looking back at the full week, the divergent earnings season for tech stocks served as the underlying logic driving market sentiment. Although Microsoft beat both revenue and profit expectations, slowing Azure growth and surging capital expenditures raised doubts about AI investment returns, causing its stock to plunge nearly 10% at one point and wiping out $357.7 billion in market cap, the second largest single-day loss in US stock history. In contrast, Apple emerged as the biggest winner, thanks to a 38% revenue surge in China for its iPhone 17 series. Yet despite the stellar results, its stock rose only 0.46% on Friday, reflecting a significant contraction in overall market risk appetite. Looking ahead to next week, the market will face a double test from key macro data. Due to the federal government shutdown, January's Nonfarm Payrolls report, originally scheduled for this Friday, has been postponed to Wednesday, 21:30 ET, while the January CPI report has been rescheduled for Friday. Current expectations are for around 55,000 new non-farm jobs in January, with the unemployment rate holding at 4.4%. If the data comes in unexpectedly weak, it could trigger a dual play between rising rate cut expectations and recession fears. Conversely, stronger than expected data could prompt the market to reprice Fed hawkishness. On the earnings front, tech stocks will enter the second half of their validation phase next week. After Tuesday's close, AMD will report the shipment progress of its MI300 series AI chips, and data center revenue growth will be key indicators of whether Nvidia's moat remains solid. Google and Amazon will follow on Wednesday and Thursday respectively. The former's input-output efficiency in cloud computing and AI search, along with the latter's resilience in AWS and core e-commerce, will provide new anchors for tech valuations. Additionally, traditional and emerging sector representatives like Coca-Cola, AstraZeneca, and Robinhood will also report earnings, offering broader signals of economic health. Geopolitical and policy uncertainties also warrant attention. Japan's House of Representatives election will be held on Sunday, February 9th. Whether Prime Minister Takaichi's ruling coalition can maintain a majority will directly impact the future direction of Japan's fiscal and monetary policies. On Friday, Trump signed an executive order imposing tariffs on countries trading with Iran, while both the US and Iran indicated that talks would resume next week. Any developments could influence the crude, oil market and inflation expectations. From a technical perspective, after breaking through the psychological 50,000 mark, the Dow may face short-term profit-taking pressure, with key support around the 40,500 level. Despite Friday's strong rebound, the Nasdaq remains below its short-term moving averages, with the 23,000 level serving as a focal point for bulls and bears. The dollar index has rebounded from oversold levels following the Warsh nomination, but its medium-term downtrend remains intact, with the 97th Mertz level acting as key resistance. In summary, US stocks are likely to remain highly volatile next week. Wednesday's non-farm payrolls and Friday's CPI report will pose a dual test. Any deviation from expectations could trigger sharp swings. Individual surprises in tech earnings are unlikely to alleviate the core anxiety over AI investment returns, while geopolitical uncertainties and the policy-sensitive period will keep market direction unclear. Investors should maintain defensive position, focus on sectors with higher cash flow certainty, and prepare for potential volatility shocks.